Well, the backdrop to the earnings that we are seeing, as I mentioned, is Fed Day, 2 p.m. Eastern Time. We are expecting rates to rise again to the highest level since the beginning of the century. At the same time, the market is not fully pricing in another rate hike, suggesting that there's a chance that today's rate hike is the last of the cycle. But investors have been wrong before. Let's bring in Jonathan Wright, professor of economics at Johns Hopkins University. We've also got Riccardo Trezzi, who's the founder of Underlying Inflation, also a former senior economist with the Fed and the European Central Bank. Thank you so much, gentlemen, for joining us. As I mentioned, Jonathan, I'll start with you. We're not pricing in fully the prospect of another rate hike after this, but we've been wrong before. How are you thinking about, the thread that the Fed is going to try and weave today?
Yeah, so I think they're going to have a statement and a press conference in which they will leave the option open of another rate hike further on. I mean, in their last summary of economic projections, they did predict one more. We've had good inflation news since then. So I certainly see why the markets are thinking this might well be it, but they're not going to box themselves in one way or the other.
Inflation is going to be core to that, not being boxed in, because we just don't know how it's going to unfold. But Riccardo, you track underlying inflation. That's literally your business. So tell us what the trajectory is.
Good morning. Well, I think in terms of underlying inflation, it's fair to say that the U.S. is tracking anything in between 3 and 3.5%, but with a good prospect going forward that underlying inflation as well as observed inflation might, in fact, moderate. I do agree with Professor Wright that the Fed is probably going to leave the options on the table for the September meetings, but I also think that the data from now to the September meeting might cooperate and might surprise a little bit on the downside. So I think that markets are exactly positioned for where they should be in terms of risk assessments.
Sorry, they are or they are not?
They are. They are.
Well, that's good because we've been rallying here. So it's nice to know that it's not vulnerable. I wonder if the risk, though, is for the Fed, that even if they start to talk tough on inflation, that the market will ignore it. Because, as you said, Jonathan, we are seeing inflation come down to around 3%. The growth has held up. So even if the Fed tries to talk tough, is there a chance that, the market starts, pricing in a different scenario than they would like?
Yeah, I mean, in general, I think the Fed is worried that overall financial conditions are pretty accommodative, and accommodative given where the inflation numbers are still looking. And the Fed is not going to be happy about starting another huge leg up in stock prices. That's not what they need. And a last thing to remember is that the good inflation news is really in headline. If you take core inflation, so taking out the volatile, particularly the energy piece, it's still got a ways to go. So the Fed will not be happy if the markets now go off to the races.
How do you think about that, Riccardo?
No, I think I do agree. In terms of sequential readings, there are, in my opinion, good reasons to think that even core inflation will moderate going forward. We saw good news in rents and OER, and we saw even good news in services excluding rents and OER. But overall, I think it is still fair to say that core inflation is way too high. And even more importantly, when we look forward, the models tell us that the probability of hitting the 2% target, even at the end of the medium term, is still relatively low, something like 15 to 20%. And that's still way too low for the Fed to twist. And so I do agree that until we will have certainty or at least a higher probability of hitting target at the end of the medium term, or at least in a reasonable amount of time, the Fed will remain hawkish. Now, whether the markets will listen or not, that's a completely different question. And I think markets will always be ahead of the curve, of course. But in terms of communication of the Fed, I do not expect a big change anytime soon.